Okay guys, just a very quick weekly forecast session. I'll go down from the month down, but we can effectively see that we are still in the bearish trend, a massive bearish month over the previous month that we've kind of seen in April. It came down, kind of took all the demand levels that we had marked up on the way down. We had weekly demand down here, we had daily demand down here, and it's actually come down and taken a fair value gap and literally tapped into it and rejected from that. And I'll show you that when we get down into the lower time frame. So effectively, I think this is now a drive down to what we said previously, COVID liquidity lying down here. Very, very clear push down. We still have areas of interest below us, which possibly will cause some sort of a pullback or a reaction. But I am now, with the move that's kind of occurred this week, possibly looking at a long-term sell with a slight pullback into this week, and then a rejection bearish again. When we go down to the weekly, we can see how the demand levels that we had marked up, both weekly and daily demand, have been taken. So the weekly demand was sitting here. We had a nice good push up, took these highs, broke above, continued higher, and then obviously it took the bullish run that we kind of saw tail end of last year to actually formed out of this as the originating demand. So market came in, respect that to a certain degree, rejected out of it, broke through, and then went down and tapped a fair value gap on the daily candle. So we can see here where the daily demand got taken, the fair value gap that we were looking at targeting was here, which was also an interim push up, which kind of took these lows and then moved into another level further up, which then took the previous highs. So that fair value gap was tapped beautifully on Thursday, I believe it was, and then we had a slight rejection on Friday. Characteristic of GU, we opened the week with a bearish move. It continued throughout the week, and then we had a slight rejection or reversal from that initial move on a Friday, which is normal for GU. As I've explained before, sometimes what you'll have on a Monday, you'll have a drive one way, Tuesday, Wednesday, Thursday the other way, and then a reversal on that on a Friday. So we can see that that is kind of effectively what's happened here. Tail end of last week, we kind of had that bullish push up, a drive down throughout the remainder of the next 5-6 days, and then a reversal on Friday. So the fair value gap was tapped. It actually caused this reversal on Friday to occur. And now what we're looking for is we are looking to target areas on the lower time frames that possibly will act as supply for us to then catch a move back down. So effectively, it's taken the previous high here, rejected out of that zone. There is a large imbalance sitting up here that we want to kind of see how the market reacts to as the market opens. So it may well be that it comes up into this area and then rejects down out of that, or it uses this as a springboard, takes this liquidity, and then continues higher to target other zones we've got further up. So the initial supplies that we were looking at beginning of the week, obviously were not tapped. The market rejected straight from those levels, but we do have areas of interest that are still left behind here with liquidity below. Good pushes out. So you've got one there, interim supply left behind. There's one here, interim supply left behind. This is more inducement. And then obviously we've got imbalance here, and then the larger supply sitting up top, which wasn't even tapped. So again, areas where we have large push outs and liquidity gets taken, equal load sitting here, taken by this move. There clearly is a lot of sell orders with the volume and the large candle that we see. There's definitely liquidity lying up here. There's a lot of highs up here that were liquidated as well. There's obviously a seller up here. So we just want to see how the market reacts at certain zones. So the demand that we were obviously looking to target, that can now be removed. The weekly demand can be removed. The daily demand can be removed. We tapped into the fair value gap. Effectively, that's been mitigated 50%. This can also be removed. I'm going to leave it on the chart for now because obviously we had a reversal out of it. And clearly there is some sort of buying pressure down here which caused this move out of the zone. So we want to kind of still pay attention to this and see how the market kind of reacts as it gets down to that point. So again, the forecast would be we want to see how the market comes up, reacts to these levels of supply above us, and then either uses them as a means to push down lower after having taken this fair value gap, or we kind of see if we get a reversal and then reaching up for higher levels of supply to then reject out of. So that effectively would be the forecast that we're looking at. As I said, it's going to be a little bit of a rough week next week because you have got NFP on the Friday, and because of the bearish move that we've seen this week, there's going to be a little bit of correction that occurs. So it's not going to be as clean as what we have seen in the previous weeks. It's going to be a corrective week, in my opinion. There may still be trades that can be had, but be a bit wary and obviously just work to levels of interest and ensure that you're waiting for, number one, the market to enter into the zone. So always trade out the zone. It's obviously a well-known saying. There's a book called Trading in the Zone, but trade out of the zone that you have marked. Make sure that you wait for lower time frame confirmation. And after that lower time frame confirmation, wait for the verification that that move is occurring. What I will try to do is show you that here. So for example, on a higher time frame here, we're looking at this move, which broke lows here. This is the confirmation of the market going lower. The verification then is when the market comes up, respects the level, and then sells out of it again. So you always, this is the aggressive entry where the market comes up and takes the trade. This is aggressive, point one. Point two would then be at this point here. This is the confirmation trade. Even though lows weren't taken, the market did not now reach up to this level again, even though there was liquidity, and this is the safe entry. So always wait for the safe entry to ensure that you're kind of getting your confirmation and your verification of that move to then move down. It will give you a lot more success in terms of the trades that you take. If you're constantly taking aggressive entries, then you will most likely get stopped out a lot of the time, because the market has not reset itself to confirm that it wants to kind of take that move. It could just be a manipulation play of pooling orders and pooling liquidity to then obviously break that and go the other way. It does happen many times. So again, as I always say, trade safe and have logic behind your trades, and make sure that you're taking trades that are being shown to you as confirmed by the market and not your own perception of what is going to happen. Okay, as with everything, any questions, please drop it in my comments or DM me on Instagram and I'll be happy to answer. Thank you. Bye.